Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of big business, and today we're looking at a company that is clearly aiming for the stars. Let's dive into Sidus Incorporated's latest filing, where they're talking about raising a significant amount of money through a stock offering. This is essentially a company saying, we need cash to grow. And we're selling pieces of ownership in our company to get it. So what is the big news? Sidus Incorporated is launching an offering to sell shares of its class of common stock directly to investors. They're planning to sell about 19 million shares at a price of $1.3 each. This is a best efforts offering, which means the company and its placement agent will try their best to sell all the shares. But there is no guarantee they'll succeed. The goal here is to raise around $25 million before fees and expenses. And where is this money going? The company plans to use these funds for sales and marketing, keeping the lights on with operational costs, improving their products, expanding their manufacturing capabilities, and for general financial health, what they call working capital and general corporate purposes. Standard stuff for a company looking to scale up. Now, let's talk about the deal itself. They're working with the placement agent, ThinkEquity LLC. For their services, Sidus will pay ThinkEquity a fee of 7% of the total money raised in the offering. That is a pretty standard commission in these kinds of deals. On top of that, Sidus will reimburse their placement agent for any reasonable expenses, up to $125,000. Which includes legal fees. Here is where it gets interesting. Along with the cash fee, Sidus is also giving ThinkEquity warrants to buy up to about 961,000 shares of the company's common stock. These warrants are like options giving the placement agent the right to buy shares at a set price, $1.625 per share for the next 5 years. This is a common way to incentivize the agent and align their interests with the company's long-term success. If the stock price goes up significantly, these warrants can become very valuable. This offering is being done under a registration statement that was already filed and declared effective, by the SEC think of it as getting the official go. Ahead to sell these shares, the company's class of common stock is already trading on the Nasdaq capital market under the ticker symbol Sidus. This means they are a publicly traded company. And this stock sale is a way to get more capital into the business to fuel its growth. By the way, Sidus Incorporated has checked the box indicating they are an emerging growth company. This status comes with certain regulatory benefits, like being able to use extended transition periods for new accounting standards. This suggests they are a younger company, likely still building its operational and financial track record. And this offering is aimed at accelerating that development. To announce this big move, Sidus issued 2 press releases on the 22nd of December. The same day, the placement agency agreement was signed. One announced the launch of the offering and the other announced its pricing. So they're being upfront and communicating their plans clearly with the market. Underpinning all of this is legal work. You'll see exhibits for the placement agency agreement itself, the form of the warrants, and importantly, a legal opinion from Shepherd, Mullen, Richter, and Hampton LLP. This opinion essentially confirms that the shares being issued are legally valid and properly registered. It's another piece of that regulatory puzzle that ensures everything is done by the book. And as part of that, you also have the consent from the law firm confirming they're okay with their opinion being included in this filing. It is all about transparency and building investor confidence by showing that the company is compliant with all the necessary legal and regulatory requirements. Looking at the broader picture here, Sidus is making a strategic move to fund its ambitions in the space industry. As an emerging growth company, raising capital is crucial for research, development, and expanding operations to capture market share. The terms of the placement agency agreement, including the fee and the warrants, seem in line with industry practices for this type of capital raise. The company is betting on its future growth potential to justify this funding round and the equity dilution that comes with selling more shares. The key will be how effectively they deploy this capital and whether their expansion plans translate into increased revenue and profitability. For investors, the warrants granted to the placement agent are a signal of confidence from the agent in the company's future success, as their value is directly tied to the stock price performance. So, what is my take on this for Sidus This filing shows a company actively pursuing growth and demonstrating a clear plan to fund it. The significant amount being raised, coupled with the use of proceeds indicating investment in core areas like sales, operations, and product development, suggests a strong forward-looking strategy. The fact that they are an emerging growth company explains why they might be tapping the market for funds. Now, it is not uncommon for companies at this stage to seek capital to accelerate their path to profitability and scale. The terms of the placement agency agreement, particularly the warrants, are a common mechanism in these offerings and can align the placement agent's incentives with the company's long-term stock performance. The most crucial element here will be execution. Can Sidus Space leverage this capital to achieve its ambitious goals in the competitive space sector? The risks, as with any early stage company, involve the inherent uncertainties of technological development, market adoption, and competition. However, the clear strategy outlined in the filing presents a recognizable opportunity for investors who believe in their vision. Alright, that is our breakdown of Sidus Space Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.